Hello traders and welcome to another weekly market forecast. Before we start with this week's market forecast, we would like to go through the last week. We can see we have seen a lot of good moves, which about 1,600 pips in our favor. Of course, we had just a few that didn't go as expected, so we'll get through that after we see the recap. Hopefully you have enjoyed, guys. So that was the correct forecast we had from last week. Now entering into this week, we are actually getting closer to the end of the month. So we'll go through each pair individually as we have done last week, so we can see what we can expect. For the dollar index, we are still within the cycle from the 28th of December 2023. At the moment, it doesn't show us any signs of reversing or anything like that. I would expect next week to see a continuation like a corrective structure here. And possibly we can have a push up next week, but still it's too early. We have to see the price action for this week. We had a very good week last week, so we would rather stay kind of the sidelines at the moment to see what the market wants to tell us into the last week of the month. So this is what we can see for dollar index. So when we go to the dollar yen, we can see similarly some correction entering the week. Now, what we don't know obviously if this correction is going to become bigger or if it's just going to be something small here and continue higher for the week after. So that's for the dollar yen. Euro dollar, we had the drop that we expected last week here. Now we can see correction, kind of a sideways movement for this week, and we'll see what's going to happen next from here, depending on what the price wants to do. We can see another drop next week, or if this is not going to be a correction, we could possibly have a bigger bounce as well. So it's kind of in the middle right now. So we'd rather, like I said, for this upcoming week, we can see some choppy price action for the majors. So on the pound dollar, it's a little bit different. It's still more sideways than the other dollar pairs. So for the next week, we can also expect some kind of continuation higher, but it's not going to be a big move. We don't have anything major for the next week that may impact the pound, so it's still within this range right here. Next, from the minors on pound yen, we expected to see last week a correction from here, which didn't happen. The market kept going higher, which is fine. If anybody was selling from this area, you would have got stopped out somewhere here, which is fine, not a problem at all. It's part of trading. So we had a new high. Obviously, this cycle from the 3rd of January, it's approaching eventually to the end. So we can see some more consolidation here and correction, which can start from the next week or possibly from Thursday or Friday we can see that. So this is what we can expect to see next on pound yen. on the Euro OS, we had this nice push up that we forecasted last week. Now is pulling back. For this week, we can see kind of bounce, drop maybe, something like that, and then it will decide. We'll see for next week what's going on. We could potentially see continuation higher from the next week onwards. So for now, we are expecting this correction is still not finished. We can see consolidation, drop, something like this, and then we'll see what's going to happen next, which is too early to say at this stage. From the indices, S&P, we expected, this is a forecast we posted on Telegram as well. We expected to see a flat correction. So I'm just going to show you what we have posted. In case you missed it, you can subscribe to our Telegram. The link is in the description. So we expected to see a flat correction before the next move higher, which the channel can still expand like this. Okay, is still valid. Okay, we can possibly see that. So next week we can see something like this here, and then we can start see a drop from the next week afterwards. So we are not looking to buy S&P at this stage, at this point. It is very overextended, which it's within the cycle from 27th of October. It's about 3 month cycle still. So if I show you something in more detail for you to understand what we can possibly see in this structure. 1 second. If I go back to show you, and we will compare it with another index, by the way. This is the structure, ending structure, and then the drop is falling. So similarly, if I show you here what we can expect for you to understand the structure that can play out. So this is kind of an ending structure for a drop. We have seen that as well in another index, Nifty. As you can see, Nifty, we had something similar here, and then drop. So this is what we can see on S&P at this stage, because obviously this cycle, it needs to give us a correction at least. So we are actually not looking to buy at this stage. It's very risky. It needs a pullback. It cannot continue higher like that. We can see other indicators, which obviously is going to take us along to explain in this free session. So we are not looking to buy S&P at this stage. For next week, on the 4-hour, we can expect some kind of a consolidation, ending structure, and then the correction downwards should be playing out from the next week onwards. Then for metals and oil, we'll go to the commodities. We had the drop in gold as we expected. Now it has rebounded upwards. So for the next week, we can see some consolidation again. Maybe a push up, maybe not. It really depends on other factors like also the dollar, what it wants to do. We could actually be still within a bigger correction from the highs of 2146. We could be doing something like this as well. So at this stage, it's in the middle. We do not like to guess what's going to happen with oil. The price on the RSI is still below the trend line, so it's a no buy for us at this point. Gold. For oil, we have expected two scenarios. Either we're going to see a bigger bounce towards the 80 level before a drop, or smaller bounce and drop from this level. So It's still in a range, as you can see. We are not personally looking for any buy setups for oil. We are not bullish on oil. There is a bigger cycle happening in oil from last year, actually from March 2022. And at the moment, it doesn't give us any sort of indicator that that has ended. So we will not be looking to buy oil at any given stage for the foreseeable near future. It's still ranging. It can drop from here. It can make a bigger bounce and drop later on. So it's too risky to make a decision on it right now. So we would rather not trade oil. And lastly, from the ETFs, the 3Qs, we also expected to see a drop from here last week. However, it has still pushed up like the S&P. However, similarly to the S&P, for us is still within the cycle from 26th of October. So very soon this cycle will be ending and we will be looking for a bigger correction to follow before we see the next cycle getting started. For those that might have been in sales, by the way, on S&P, I'm just gonna explain something, how you can manage your trade. So if somebody was selling from this level, then you see we had a drop before this push up. However, you always need to check your Fibonacci retracement because it has retraced even beyond 50%, which this should have allowed you to move your stop loss to break even. So you have a risk-free trade even though it pushed up. So this is how we like to trade. When the market moves 50% off the Fibonacci retracement from the previous impulse before it moved in our favor. We like to create a risk-free trade, so even if the structure changes, it doesn't really affect us in a negative way. Okay, so that's what we had for this week, guys. I hope you have enjoyed. Leave us a comment below if you have anything specific to ask or if you want to give us your feedback. Remember to subscribe, like, and share. And we also have the Telegram channel in the description. You can join and subscribe so you can be notified when we have an alert or something we want to share with you. We also have some polls, and very soon we will be doing a YouTube series about how to start trading. I will be covering many important things like the execution venues and stuff like that. You will learn a lot of things as most of you are beginner traders or within the first or 2 years. And check out as well our trusted broker One Royal. We do have a special agreement with them. You will be receiving on a monthly basis cashback on your trading volume, which means any trades that you have closed, any of your trading costs, we will give to you back between 20 to 25% of this cost. So it's going to be very, very beneficial for you since you're gonna have the best trading conditions alongside with the lowest cost possible for you to be trading. Yep. So have a good weekend and we'll see you in the next week.